with the power of compounding, you do not need a high win rate or a massive risk to reward to make really good money trading. And let me run you through why. So to keep the numbers simple, we'll assume you have a starting balance of $5,000. You risk 3% per trade, which is $150 per trade, with a 60% win rate, which is essentially you win 6 times and lose 4 times out of 10 trades. Risk to reward 1 to 2, so you are winning $300 each trade and you are losing $150 each time you lose. So to keep the maths simple, assuming we take 10 trades per week, that is total wins. So 6 times 300, which is $1,800, and you take 4 losses at $150 each, $600 of total losses for the week. So your net profit is $1,200, which equates to 24%. So even if we assume you only take 5 trades per week, so let's say you're very selective, you're taking A+ trades only, which you should be, that's 12% you are gaining on this $5,000 starting balance per week. Very achievable. So let's take this example and these numbers and plug this into a compound interest calculator and see how it looks. Assuming our initial investment is $5,000, as we said, we'll assume we can make 12% on that per week with a 60% win rate, taking 1 to 2 risk to reward trades. Let's assume that that is compounded weekly, so all your wins are put back into your account, and then obviously your 3% risk per trade goes up each week. Let's see if we can maintain that over 6 months, how that looks. So yeah, over 6 months, compounding that account, you can see the growth here in the monthly breakdown. You grow that account to just over $95,000, which is huge. So I'll leave a link to this compound interest calculator I've used to calculate this, so you can play around with your own numbers and your own trading data and see how it looks. And just a simple 1 to 2 risk to reward strategy, 60% win rate. Of course, maintaining 12% per week consistently is very difficult and would require significant discipline. This is a mathematical example, not a guarantee.